Dividends are a great way to earn passive income, but if you don't handle them correctly, you could be losing out on a lot of potential profits.
$22 million in 3 fucking hours!
In this video, I'm going to teach you how to be a proper dividend investor. If you are new to the channel, I'm Monetary Mike. I make videos on finance and investing. If you enjoy the video, make sure to like and subscribe. First up, we're going to look at dividend growth stocks, specifically dividend aristocrats or dividend kings. For those of you who don't know, a dividend aristocrat is a company that has increased its dividend for 25 or more years. And a dividend king is a company that increases its dividend at least every year for 50 years without ever making a cut. First on this list, we have Walmart. Walmart's first dividend was paid in 1974. Walmart has increased its dividend for 51 consecutive years, which also makes it a dividend king. Walmart has had a resurgence of growth in the past few years by adapting to the changing climate for retailers. It has invested heavily in its online presence and has proven it's one of the best equipped companies to compete with Amazon. Next up, we have Realty Income. It's a retail-focused REIT, R-E-I-T, or Real Estate Investment Trust. It has become famous for its successful dividend growth history and monthly dividend payments. Even labeling itself, this is even on the website, the Monthly Dividend Company. The trust employs a highly scalable business model that has enabled it to grow into a massive landlord of more than 15,000 properties. At the time of this recording, Realty Income has a yield of 5.5%. And REITs are at historic lows, so now would be a great time to look into investing. Other great companies with great dividend growth are Costco, Visa, MasterCard, Johnson & Johnson, and Coca-Cola. I would suggest going and looking at all of these and make sure to do your research if you are going to invest. Next on the list to be a great dividend investor, do not yield chase. If something has a 30% yield, huge red flag. In my opinion, anything more than 8%, really do your research onto why the yield is so high and if it's even worth it in the first place. There are these things called covered call ETFs that cap your growth and cap your way down, but you get a higher dividend. Covered call ETFs can yield anywhere from 10 to 30, 40, 50. There's even individual share covered call ETFs that yield 102%. I'm speaking of Nvidia's right now. Stock ticker NVDY if you want to go check it out. When it's individual stocks, it's usually levered, and it uses that leverage to be able to pay you a dividend, but then it caps your upside on the price of the stock. Now, I'm not against high yield for the short term. If you wanted to put something that was like pretty consistent, like a REIT, other than of recent years because of COVID, REITs kind of took a but REITs are a great 5 to 8% dividend payer, and they're usually really consistent and they don't cut them because they're so strong of a company. I personally hold a couple really high dividend payers that I'm not looking at for growth because I'm going to be using the money in the next couple of years. So I can't put it in the S&P 500 because if that takes a dip, I'll just be losing money. But if I can get like a 25% yield on just something, it's just it's less risky for the short term, but long term would be a no for me though. So you've bought your stocks and now you're like, what do I do now? Now you got to be patient. On most platforms, you can reinvest dividends and then you don't even have to worry about it. It will automatically reinvest those dividends into more shares and in turn, making your dividends be more and more and more and more and more. Thank you guys so much for watching. If you made it all the way to the end of this video, make sure to like and subscribe and leave a comment down below if you're going to be buying any of these dividend stocks.